All right, let's talk about that miscellaneous drawer of your personal finances, income from other sources. It's the official catch-all for any money you earn that isn't from your salary, a business, or investments. And honestly, understanding it is absolutely key to getting your taxes right. So your paycheck is taxed. That's a given. But what about that dividend that just popped into your account? Or, the cash you won in a friendly card game? Where does that money even fit into the tax system? That's exactly what we're going to dig into right now. We've got a pretty clear roadmap for this. First, we'll break down what this catch-all category really is. Then, we'll look at some specific examples. After that, we're diving into the super important rules on deductions and gifts, and we'll wrap up by defining who actually counts as a relative in the eyes of the taxman. Okay, so when it comes to income tax, everything gets sorted into 5 main categories, or heads. You've got salary, house property, capital gains, and business income. Well, income from other sources is that 5th and final head. It's basically the official safety net for anything that doesn't neatly fit into the other 4. The whole point is pretty simple, actually. If you receive some money and it can't be classified under any of those other official heads, boom, it automatically lands right here. This makes sure that pretty much all income gets accounted for, leaving no weird gray areas. So what kind of income are we actually talking about here? What ends up in this bucket? Let's take a look at some of the most common examples you might run into. And the variety here is pretty telling. You've got your typical investment returns, like dividends. Then you've got winnings from lotteries, games, or any kind of gambling. And this is important. That income is often taxed at a high flat rate of 30%, with no deductions allowed. And finally, you have more unique things, like payouts from a key man insurance policy, which is basically when a company insures a super crucial employee. All of these get swept into this catch-all bucket. So, of course, the next question is, can you lower this taxable income by claiming expenses against it? Well, the answer is, it depends. There are some really specific rules about what you can and what you absolutely cannot deduct. The rules on deductions here are like night and day. For something like dividend income, you can deduct related expenses. For instance, if you took out a loan to make the investment, the interest on that loan is deductible. But for winnings from lotteries or games, you get 0 deductions. Nada. You can't even write off the cost of your tickets from your prize money. The tax is on the entire amount you won. Period. All right, let's switch gears to another area that trips up a lot of people: gifts. When you get money or property from someone, is it considered taxable income? This is where things get personal and the rules get very, very specific. I mean, this is the question at the heart of it all, right? If your best friend gives you a big cash gift for your birthday, or a family member helps you out with a down payment, do you suddenly need to worry about taxes? The general answer might actually surprise you. So, here's the basic rule. If you receive gifts from people who are not considered relatives, and the total value in a single tax year goes over 50,000 rupees, the entire amount becomes taxable income. The key phrase there, though, is non-relatives, because who gives you the gift changes everything. To really understand the gift rule, you have to know exactly who the tax law considers a relative. Gifts from these specific people are totally exempt, no matter how much they give you. So let's get that official definition. The official definition is actually pretty broad. It obviously includes your spouse and your siblings, but it also covers your spouse's siblings and your parents' siblings, so your aunts and uncles. And crucially, it also includes any lineal ascendant or descendant. Now, that's just a formal way of saying your direct family line, so your parents, grandparents, your children, and your grandchildren. A gift from anyone on this specific list is completely tax-exempt for you, no matter the amount. So there you have it, a quick tour of the 5th head of income. We've covered everything from dividends and lottery wins to the nitty-gritty rules on gifts. The real takeaway here is that not all income comes with a payslip, and at the end of the day, it's your job to track it. So the question is, are you tracking it all correctly? Thanks for tuning in.